Good afternoon, friends. This is again a weekend educational video. Often I'm talking in terms of pivots, but here let me show you how moving averages can filter trades, particularly on individual stocks, but it can be applied to any traded instrument, and that will give you a nice thumb rule of which side to go post the market open. So let's get started and see what I want to tell you about. So let's pick up our whiteboard. See, let's start with the 5-minute chart, although it is applicable to all time frames. On the 5-minute chart, this is the 200. And this is the 20 period moving average. So when the price is near the 200 and the 20 is close to 200, what you are looking for is an expansion. So you wait for the first hour to play out and then you are trading the breakout or a breakdown as the case may be. Now this is one scenario. Second scenario is that one prior day there has been a decent rally and now the 20 is far away from the 200. Next day you open gap up and soon you start to decline. Now this, the pre-qualification is one up day. You can easily have two up days and that will be your reading of the price action, but post one up day in normal circumstances. There will be times when you have a strong trend, you have some budget coming in, this, that. But even if it is a strong trend, on the second day, generally speaking, from the highs, you will come down often towards the 200 before resuming the uptrend. So two scenarios. First scenario, you are at the 200 and from there you are having an expansion. Second scenario, 20 is far away from 200 and the price is far away from 20 and that leads the market to collapse. It works much better on indices than stocks, but definitely it works on stocks as well. So let's go and see how we can use this theory in terms of trading, mainly the indices, but I would encourage people to try to do stocks with this as well. So let's get back to our charts and see what I am talking about. Okay. Now let's start with this day of 11th September. This is the Bank Nifty. Now, as you can see, early morning, the first bar was a very strong bar, I think 150, 170 points higher. It exactly matched with the previous day high. and from there you got a fairly serious decline. This is relatively far from the 200. Why? Because the Bank Nifty is also in a downtrend, plus it matches with a previous day high. Okay, so this is the first setup that you are getting. The other setup you have is the Bank Nifty on 10th of September declined towards 22,250. If you see behind, there is some support here, but more than the support, the 200 is at a distance from the 20 and price is at a distance from the 20. This is 20, this is 50 period moving average. So again here, once you start getting distance, if you pay attention to price action and you start to see this green getting cleaned out, this was a nice profit. Let me expand and show you. Here, the price kind of overextended, and it is easily possible to see that green is coming back into the market because it is overextended. See, now this overextension is a relative phrase. In a trending market, you may have 3 down days and the price may still not be overextended. In a ranging style market, it will become overextended fairly quickly. Now, the second example that I gave you was 20 and 200 being together. So, uh, here, this day started around 9:30 and the market consolidated near 200. And the moment this first hour low started to get taken out, this is the 20 period halt, you started to collapse on the downside. So immediately if you are trading near the 200, there is no way you are going to play on the opposite side. Let's go back further and see what else we could have done. Now you see, this is 7th of September, 200 away from 20, price away from 20. So immediately at the open, you can see signs that this could be a reversing type of day. So you bought into calls or futures or whatever, and you held on, and basically by end of the day, you made something, or basically got out, I think a bit flat. But you got the point that this was a day to buy into the market. Again, here, huge gap, 220 far apart, price away from 20. Immediately, the idea is to buy, and by half a day, you got your money. Similarly, if you see here, the first bar itself started to show you a sell off. Again, relatively from 200, this is higher because you are also dealing with an uptrend. So you go short and immediately intraday, you are able to get money. Now this is 2nd of September. Again, these days you are in an downtrend, but again price away from 20, 20 away from 200, and by end of day it started going up. Okay. Again, price 20 and 200 far apart, price away from 20, and you got your pullback back to 200. So this was that large day. Again, the price opened so far above the 200 that it had to collapse. Now here you can see this is relatively close to 200. So you are not going to go short. Whether or not you go long is up to you. Again, far apart. But since the bank nifty was trending, it held up. No need to do this. Again, in my opinion, far apart. You can let it go. Far apart from 200, and the market was in such a strong trend that the price was not coming down. But here you are close to 200. So immediately you could have traded an expansion. So different market phases call for different technique. Close to 200, you could have traded it up. Okay. Away from 200, away from 20, if you went short here, you got something by end of the day. Every day will not be a blockbuster day, but look at here. Price very close to 200. Okay, and it starts to expand on the upside. Again, price far away from 200, far away from 20. So you could have gotten and rallied back to 200. Okay. Now this is trading close to 200. So draw a box and you are able to catch this. So early morning, before things open up, you know which way in the pre-market, where are you going to open. If you are going to open away from 200, away from 20, you can immediately decide to go short. Now here you can see you got a collapse. Now this is near 200. So immediately you want to buy into this move on the upside. Away from 200, away from 20. Sell here, book profits at the as the market declines. Again, price rockets up in the first half an hour. So you won't be trying to get long here. It's up to you whether you think this is appropriate to take a short. That short would have worked, but being long would not have worked. So use this basic thumb rule that if price is above, away from 200, away from 20, you will take the other side. If price is near 20 and 200 and both of them are together, you will take the range expansion route. Again, if you see here, price and 20 are far apart and 200. So immediately you got a collapse. The previous day was an uptrending day. So one up day plus this sort of gap up often leads you to a collapse on the other side. Here, I would not argue that this is too close to 200, so let it be. There is no need to trade daily, but what this did was it created this setup. Okay? Here, you are not close to the 200, no question of being short. Could you have gone long? Maybe you would have made a little bit of money, but no problem if you didn't take the trade. Here, this 20 and 200 are together. The moment you break down, you start to get your large move. Pivots and moving averages are basically the same thing. So this I am telling you from a moving average type of angle. A pivot is very close to the 200 on 5 minutes, the daily pivot. Yesterday high low is R1 and S1. So you can use either of the two things if you have clarity on what you are looking for and what are you doing. Okay. Here again you had a strong uptrend, then a second up day, and then you collapse. Here you are close to the 200, price is close to uh, 220, and immediately you gap down and you start moving sharply lower. Okay. Again, you are getting very close to 220. Next day, you get your expansion. Far from 200, far from 20, collapse. Here, I would not debate. You can let this be. It's neither too far away, nor is it too close to the 200. We were here. On this one, what you do is definitely no buying. Wait for this rally to exhaust and look for price action to start making lower lows. See, basically, what is price action? You make one high and you make a second lower high and you come off. But if you make one high and you consolidate, chances are you go up. So either of these two things will happen. Okay? So what you have to do is, since buying is out of question, the moment you start to see these lower candles, you can take a short position and possibly get out with a small profit. See, there will be big days and small days in this. So this is your big day. It started on the previous session on the 20th. You got a bit of continuation, but if you are trading all day long near the 200, your first response should be that I want to buy if there is a breakout. I'm showing you examples of from Nifty Bank because Nifty Bank tends to give you very extreme moves. Here again, you are near the 200, 20 price 200, everything is nearby. And the moment the market starts to collapse, you can easily act in that direction. Next day, you gap down, price far away from 200, far away from 20, and you got the other side. I think this can easily be applied to individual stocks. It can be applied to indices, but it is a bit of judgment. So you have to see which one is a clear, you know, hitting the ball out of the park, and which one is kind of middling. Let me show you Titan. Titan on the 11th, it gave you big strong move, but what happened? It basically hit this high and started to collapse. So when you get these sort of sharp moves, they will often collapse back down. So just have this thumb rule that if we are near the 200, we are looking to buy. If we are away from the 200, we are looking to take the other side. Okay. Now, uh, what are we looking for Monday's session? For Monday's session, given that we have uh, a 40-50 point gap down on SGX, we are going to gap down in this area which is near the 200. So what do you want to do? You want to buy into this. You don't want to sell into the 200. Okay. Even on the bank Nifty, you want to buy into this 200. You don't want to sell into the 200. This is reasonably close. So what you expect is some kind of a trend day. Which side we'll figure out, but it's very clear that you know what you are going to do Monday morning. So that really helps if you have a bias before you get on with it. This should be all. Take care, trade well, and please consult a financial advisor.